the other thing when we're talking about paying tax bills, if it's, for example, your first year in the tax return system, or if it's the first year where your tax liability is over £1,000, it is worth just pointing out about payments on account. So if again, it's one of those where if your liability is more than £1,000, and if you paid less than 80% of your tax source, so through your payroll or whatever, then HMRC will go, you now fall into payments on account. What that means is, say, for example, this year you had a liability of £4,000. They'd say, we're going to assume that next year's tax return is going to generate a liability of another £4,000. So they split it up and they say, alongside the first liability that's owed on the 31st of January of £4,000, you're also going to have to pay the first payment on account. So you're going to have to pay 50% of next year's liability too. So another £2,000. So the 31st of January bill is £6,000. Then you have to pay the next payment on account by the 31st of July following that, another £2,000. And then assuming that your liability was £4,000 for the second year, then you wouldn't actually have to owe anything by the 31st.
You wouldn't have a balancing payment.
No.
So the first year is always painful because you have that 6,000.
Yeah.
But then if you followed it round and that was always the thing, you just end up paying 2,000 every 31st of January and 31st of July.
Yes.
And I suppose I get a bit frustrated sometimes with payment on account, but then when you think about it, you're actually making the first payment 9 months into the tax year to which it relates, and the second payment is 3 months after the end of the tax year to which it relates. So it's not actually that bad.
Yeah.
It's probably worth mentioning, though, you can apply to reduce them.
Yes. So you can do that if you are expecting your liability to come down. We have people who maybe are self-employed, but they then leave the UK midway through the year. So actually maybe their self-employment income will sit within their personal allowance. They're not going to have a tax liability. So you can look to reduce it all the way down to nil if you want to. HMRC are going to definitely charge late payment interest if you reduce the payments on account too low. But conversely, if you end up overpaying your payments on account and then when you do your return realise that you've overpaid them, HMRC will lower those payments on account down. So to put some context into that, say your tax liability for this year was £4,000, you pay the 2,000 31st of Jan payment on account, 2,000 31st of July payment on account. You then do your tax return after the 31st of July and realise that your tax liability was actually £3,000. From a C's perspective, what that means is they would lower your payments on account, because the payments on account are literally that they're a payment. They're not actually saying this is what your tax liability is.